I cannot just bash into a company and say, oh, I want to interview director, or I want to interview your auditor, accountant, company secretary, or whatever, right? I can't do that. So what empowers me to do that? To interview your staff or see, Eric, you mentioned to us just now pertaining to due diligence. I just want to ask you several questions on this. Okay, you see, I know my understanding is that if I were to sell my companies to this company, I would need to have a data room, provide all the documents requested by them, and they would give me a checklist of what to prepare to them, right? So, yeah, for me, they're just kind of like packing documents, go through documents, and come up with a report. Correct me if I'm wrong. But does due diligence only limited to that, or does it go beyond that?
Well, I think it all depends on the scope to be agreed between the parties.
Okay.
So due diligence can be in the form of requesting for documents,
Okay.
and it can also be an interview form.
Okay.
So after you check the documents,
Okay.
and you find that clarifications is required,
Okay.
the buyer lawyers can always request for an interview with the company's representative.
Meaning to say that does it only limit to the directors?
Not necessarily. It
Oh.
depends on what questions that you want to clarify.
I see. So if this is a thing, because you see, you are seller, I'm buyer. I cannot just bash into a company and say, oh, I want to interview director, or I want to interview your auditor, accountant, company secretary, or whatever, right? I can't do that. So what empowers me to do that? To interview your staff or
you can always request for permissions from
Okay.
the vendors to
okay.
interview this person or that person, or even go into the company secretary's office
Okay.
to check the corporate documents.
Oh, that's allowed?
Yes.
I see.
Normally, the vendors or the companies will provide permissions because
Would-
it's part of the due diligence process.
Would it be inserted? Can this clause of saying that I go into a company to do the interview be inserted in the letter of offer?
Yes, you can do so.
Or is it
You
okay?
can do so. But it's understood that we can do that.
I see. So is it like so normally what you do is that after you check all the documents, you will interview directors, you may also interview the account staff, maybe operation manager,
Yep.
or perhaps company secretary.
Yep.
Or if the company has got a CFO, you would interview the CFO.
Or CTO.
CTO, Chief Operation
Chief
Officer.
Technology Officer. If the company is a technology company,
I
you
see.
might want to know more about the technologies that they possess.
So can you ask them to furnish more documents to you?
Yes, for sure.
I see.
Yep.
So they will need to furnish whatever you request.
Yep.
Have you ever encountered any scenario that when you request for some documents that they decline to provide to you?
Oh, yes, we have.
Oh.
If that's the case,
Okay.
then it will trigger the advisors that the vendor or the target company itself, they could be hiding something. Something is wrong.
I see.
So we, as a lawyer, we will need to flag it out in our due diligence report to say that we requested such document or information, yet it was not provided for the reasons that only the vendor or the target company know.
Let's just tell us some of the stories that or experience that you have had. This company, just a scenario, you go to look for them. Okay, you say I want to request for this document, but then they delay the whole thing, and then they refuse to provide to you. Or how's the scenario?
Normally, they will not delay or they will not provide to you directly. They will probably provide only half of the documents.
I see.
Not the whole documents itself.
I see.
So it's up to the lawyers to query further.
Okay.
To doing an inquest on them to say, okay, you have provided this document, but this is not the complete one. We need more. Can you provide us the subsequent documents to this document so that we have a complete pictures of what's going on?
I see.
If they refuse to provide or they somehow ignore a request, then probably you will know that something is wrong. They might be hiding something that they don't want you to see that could potentially jeopardize the whole thing.
You see, is it hiding something? I just need to ask you on some other topic. This I'm talking about. Let's say the company has been in operation for many years. They may have some debtors or some creditors. So would it come to a scenario that they refuse to disclose their creditors to you?
They may.
They may, right?
They may. So it's to the purchasers' advisors, such as lawyers, auditors, to find out, to see whether this company has any other debt or to see whether there is any other creditors that is not disclosed in the accounts.
We won't be able to know, right? We wouldn't be able to know also.
Well, it's up to the sincerities of the parties. If
Mm.
they want to hide, then definitely we will be able to catch them in the clauses in the share purchase agreement.
I see.
So the whole idea is that the vendors or the target company will have to provide full and frank disclosure to the purchaser so that the purchaser can make a concerned decisions to either to proceed or not to proceed with the purchase of the companies.
I see. Have you seen ever such a scenario that when a company after it is purchased, then after the new owner receive any writ of summons from some creditor which is not being disclosed?
Yep. So far we have not encountered such scenario.
Okay.
But if that happens,
Yep.
if these litigations or this claim was not disclosed during the due diligence process,
Yes.
then the purchaser can actually rely on the terms of the SPA to claim against the vendor.
Meaning to say they're asking the seller to indemnify them.
Yes, to reimburse whatever expenses or whatever costs incurred by the company after the takeover.
I see. Okay. That's fair enough. Yeah, this one is just a bit practical question. How do you decide the due diligence scope and the budget or the time frame allocated?
Okay, several factors
Yeah.
that we need to take into account.
Hmm.
Number one is, of course, the size of the companies.
Okay.
Whether the company has any subsidiaries companies or not, or the history of the company, whether the company has been there for many years,
Okay.
and to what extent you need to do due diligence on the company's historical documents,
Okay.
either for the past 5 years, past 3 years, past 1 year. It's all up to the parties to decide.
Okay.
But I would say that normally it wouldn't be more than 3 months if it's just one company with several subsidiaries, and the
Okay.
scope of the due diligence is only limited to 3 years to 5 years of the documents. It wouldn't be more than 3 months.
It wouldn't be more than 3 months.
Yeah.
Okay. Okay. Like would you ever encounter such an issue? Like, let's say you may also interview the auditors, company secretaries. Like, would you even encounter the issue of them if they ask you to provide you the certain documents, then they would unable to locate the documents and then
Yeah, it may happen.
yeah.
It may happen.
Yeah.
So it's up to the vendors or the companies to rectify it.
How do you deal with it? You request them to rectify it.
Yeah, definitely. Let's say if some of the documents are missing from the records, definitely it's the obligations of the company or the vendor to rectify it.
If unable to be rectified,
then we have to raise this to our client, our purchaser, to say that, okay, based on our due diligence, there are some documents are missing. Do you still want to proceed or not?
I see. What are would I consider those being documents unable to be located when you request for certain documents, you're unable to get those documents? Would it be considered as red flags?
Oh yes, definitely a red flags. But we also need to take into account what documents that are missing or cannot be located.
I see.
Right. Say the documents are very important pertaining to the transaction, definitely it can become a deal breaker.
Okay.
But if it's just administrative documents which can be rectified subsequently, or parties can live without it, as the document will not have much implications on the transaction itself, I think we can still proceed.
I see. So, Mr. Eric, just now you categorize those documents like not that, I'll just say it correctly if I'm wrong, not that important and important documents that may be the deal breaker. Can you roughly tell us what are those documents that are not so important and those that are extremely important or very important? Just an example.
That's a very difficult question to answer.
Yeah.
But just to give you some examples.
Yeah.
For example, this company possess certain licenses
to
operate certain businesses.
Okay.
And if you find that the licenses has already expired, and the company is not able to furnish a renewed license to you,
then
definitely it will jeopardize the whole thing, because when the buyer wants to buy the company, they are also looking at the businesses itself.
Okay.
Without that licenses, probably the company's valuations may not be the same anymore.
I see.
Right? They may not be able to do certain business because they are now without that particular license. Right? So these are the things that potentially jeopardize the whole thing. So that's why it's very important for us to check thoroughly to make sure that whatever approvals, licenses given by the regulators to the company is still valid and subsisting.
Having said that, those licenses are issued by the government departments, but yourself were also able to have a check with the government department prior to entering into that deal, right?
Normally no.
Normally no.
Unless the information is made available
In the public domain.
In the public domain.
I see.
Otherwise, the regulator will not simply disclose to anyone.
I see. So, okay, this is it. So, what are the, like, you say there's red flags. Those are some of the red flags. What are those top 5 red flags that you normally encounter in doing this legal due diligence?
Okay, top 5.
Yeah.
First,
yeah.
I think is the licenses owned by the company. Second is the claim by the creditors.
Okay.
Third, I would say employment and employment related disputes.
Oh, okay. Oh, that's the...
Yep, that's also very important because the company may face a claim by their former employees, such as their directors, their C-suits level, or even the normal employees.
Meaning to say, not the pending suits, you mean the future suits or?
Yeah, it can happen.
I see.
So you will have a case whereby after the completion of the exercise, you just found out that the ex-CFO of the company is now trying to sue the company
for
maybe wrongful dismissals.
I see. So you've encountered that?
Yes, of course.
I see. Okay, but the deal hasn't been...
Yeah, some is during the deal, some is after the deal, so it depends.
I see. So what is the fourth red flag?
Fourth red flags, I would say, is about the company's assets.
Oh, okay.
So you have to, when you do the due diligence, you have to be able to make sure that the companies can provide documents to evidence the ownerships of the assets or properties owned by the company.
Okay.
Because some of the companies, they may just rent or lease the asset, and they may not be the owner of the assets or of the properties, right? For example, let's say the companies rent land for factories purpose or whatever. So you have to make sure that the tenancy agreement or the lease agreement is still valid, is there, right? That the landlord is not terminating the lease agreement or the tenancy agreement.
Okay.
So one of the way is that we have to review the contract. We have to see the terms of the tenancies.
Okay.
To see whether it's still valid or not. If it's expired or going to expire, so it's up to us to put that conditions in the share purchase agreement to say that the vendor is obligated to seek for renewal with the landlord to renew the tenancies or lease of the properties.
I see.
The fifth one, the fifth one would be more on the accounting aspects of the companies.
Okay, missing records or whatever.
Yeah, missing records, or maybe the practice is not on par.
Oh, okay.
Maybe like for certain companies, they may have different kind of accounting practice. So it's very important that financial due diligence is also carried out on the company to make sure that the accounting practice is as provided or per the standard imposed by our generally accepted practice in Malaysia.
So I believe there's one Malaysian account practicing standards, right?
Yeah. I think it's called Malaysia Financing Reporting Standard. Yeah. So not most of the Malaysian companies adhere or comply with that standards.
I see.
And that can only come from the auditor itself. So they have to confirm. If not, then we have to see the auditor accounts whether it complies with the Malaysia financial reporting standard.
But your client would also need to engage a different auditor to do the work, right?
Definitely, they will need the financial auditors to come and verify that.
I see. Okay. So those are the 5 red flags. Okay. Okay. Since you mentioned about this 5 red flags, but what you mentioned to me, I think I will need to ask more on you because I'm going on the hidden liabilities, you see. Would there be, like I said, you say the guarantees being made, security interest or related party loans, all these, are those hidden liabilities part of those red
If
flags too?
if they disclose, then it's not hidden.
Oh, okay.
If the vendors or the target company disclose, then definitely it's not a hidden liability.
Okay.
But if it's not disclosed, then of course it becomes hidden.
You see, your guarantee maybe the company has been operation for many years. Directors may have executed certain guarantees and they have forgotten and they don't have a copy of the documents, you see. So
Okay.
yeah. How would you deal with that? How do you deal
Okay,
with that?
so for directors' guarantees, normally it will be a personal liability.
Hmm?
So if the company's defaults, then the directors will need to be liable for that liability incurred by the company. It's unlikely that the director would forget on the guarantees that he provides. So normally, I think the directors or anyone who provide a personal guarantees on behalf of the company or for the companies will be able to provide those documents
I
to
see.
the purchaser.
I see. Okay. Because somehow also we may come across any like some Apek China they've forgotten already. Say I very old now. I cannot remember what I've signed. No. Is that common for you?
That's not an excuse.
That's not an
That's
excuse.
not an excuse. That's not an
Okay.
excuse.
Okay. So I believe this covers our due diligence part. The next part we're going to go into is on the share purchase agreement, like what been mentioned by Mr. Eric just now.